Hello and welcome back to the channel. There's an article from Coin Central. It's about regulation. And this is a case that's been a long time in the making. Don't forget to like, subscribe, and leave a comment. And always do your own research. I'm just a guy that gives you the news. And the headline says the SEC finalizes civil judgments against former FTX executives over collapse. The SEC finalizes civil judgments against former FTX executives, imposing leadership bans and injunctions after the exchange's collapse. And the main points here are the SEC finalizes civil judgments against Caroline Ellison, Gary Wang, and Nishan Sai of the FTX collapse. Ellison faces a 10-year ban, while Wang and Singh face 8-year bans from public company roles. The SEC claims the FTX secretly provided Alameda with special privileges, diverting customer funds. All three executives agreed to permanent injunctions, barring violations of U.S. securities laws. The Securities and Exchange Commission (SEC) has finalized civil consent judgments against 3 former executives of FTX and its sister firm, Alameda Research. Caroline Ellison, Gary Wang, and Nishan Sai were involved in the crypto exchange's collapse, with the SEC accusing them of misleading investors and diverting customer funds for personal gain. The civil judgments, which are awaiting court approval, conclude a significant chapter in the SEC's enforcement case tied to the failure of FTX. FTX alleged misrepresentation of operations. According to the SEC, FTX misled investors by falsely portraying itself as a secure and reliable trading platform. The platform raised more than $1.8 billion, claiming to offer strong protections for customers' assets. Additionally, FTX assured investors that Alameda Research operated like any other customer on the exchange. However, the SEC revealed that these claims were false. In reality, FTX secretly granted Alameda special privileges, allowing the firm to circumvent risk control and providing an unlimited line of credit backed by customer deposits. The SEC alleged that Caroline Ellison, the former CEO of Alameda, used these funds for high-risk trading, investments, and loans to executives. Wang and Tsai, who were key figures at FTX, are accused of creating the software systems that enable the diversion of customers' funds to Alameda. Settlements and bans for executives. Without admitting or denying the SEC allegations, all 3 former executives agreed to settle the charges by accepting permanent injunctions. These injunctions prohibit them from engaging in activities that would violate U.S. securities laws. All part of the settlements, Ellison has consented to a 10-year ban from serving as an officer or director of any public company. Meanwhile, Wang and Tsai have agreed to an 8-year ban from holding similar roles. That means that they can hold similar roles in the future. In addition to these bans, all these individuals have agreed to 5-year conduct-based injunctions. These injunctions allow the SEC to take swift action if any of the former executives re-enter securities-related activities inappropriately. Criminal sentences and current status of executives. As of December 2025, that means as of now, the criminal status of the 3 executives has been resolved. Caroline Ellison is under home confinement, with her release expected by early 2026. Both Gary Wang and Anisha Desai received time-served sentences, having cooperated extensively with federal prosecutors. Wang is currently under supervised release as is Tsai. The SEC enforcement case against these executives marks a significant step in the regulatory response to the FTX collapse. The civil judgments are expected to further strengthen the SEC's efforts to hold individuals accountable for misconduct in the cryptocurrency space. And the article was from Maxwell Mitama. And as always, I will leave the link in the description so you can read the article as you like in your own, as you prefer it. And as always, thank you for watching the video, and I will see you in the next one.